Yo, what's up Banter fam? Welcome to yet another masterclass. In this series, I'm going to be teaching you my secrets, my tools, and my strategies on how I managed to do it in a short period of time. First thing I need to do, I need to smash that like button. Then I need to smash the subscribe button. And if you are opening any new accounts, make sure to use the links below in the description, as that will qualify you for any giveaways, for any specials, and showing love and support for the channel. In this masterclass, I'm going to be teaching you these funny moving averages, teaching you what they are, how to set them up, and why are they so important to actually use. With that said, this show is sponsored by BYBIT. No more wasting time, let's get into it. So Banter fam, what are moving averages? Guys, this is a very well-known strategy across the world. A lot of traders like to use it as it's quite simple and it helps you forget the noise. You know, when you jump into the charts and you see the price is moving up and it's quite a volatile market, right? Now these simple indicators help simplify that. They help to basically average the price over a certain amount of time of what a token has done, and they like to actually give you a smooth navigation of what direction that trend's actually moving in. So it's a nice little tool that ignores the noise and it always refers you back to a sort of strategy and gives you a little bit of structure to your actual trading. Now, why do we use this? Guys, because what it basically does is it teaches you on what trend we are actually in. Are we in a buying trend? Are we in a downwards trend? And what's lovely about these is when we are in an up moving trend, we love using these as support, as it will keep supporting. We will come down, test these levels, and it will just confirm that we are still moving in the right pace and the right direction. And if all of a sudden we start dropping those supports, it will give you an indication that trend might start to change, and you need to be aware of that. Now the same thing when the market is moving down. If the market is trending down, these moving averages are used as resistance points. And anytime we start breaking these sort of points, it will give you an indication that the downwards market is starting to slow down, lose a bit of steam. You need to pay attention because there might be a reversal in trend. Now, how do we use these guys? So now we're on the charts and I want to show you how we set this up. Now, if you jump to your indicators and your strategy section, which is this FX bar at the top over here, and you jump on, you want to type in MA. Once you type in MA, you will see the moving average. You will then click a star so that it's always under your favorites if you ever need to select it again. And what you want to do is you want to select this 3 times. Now remember, we do have 4 different main moving averages, which are the 20 moving average, the 50 moving average, the 100 and the 200. I personally like to use the 20, 50 and the 200, and those are the ones I'm going to be showing today, as I have a nice little long-term and short-term strategy to actually go with them. You know, end of the day, with these indicators, none of them are perfect on their own, but they work really well when you have a combined strategy with them. Now, once you have selected those, you will see these 3 bars pop up on the left, and they will usually be set in at a standard of 9, and you'll see 9, 9, 9. Now you need to change this and you need to make them the averages that I just spoke about. So you want to go to the settings, you then want to go to inputs, and you see this length, you're going to change it to which moving average you want. So for this one, I want to be setting at 20. We usually use a standard color of green for that, and I'll click OK, and then we'll see this line pop up on the actual chart. Now you do the same with the next ones, where you're going to be adding your 50. You're going to be looking for your length, change it to 50 and change the color to red. Now remember guys, if you do have a free trading view, they're going to restrict you. They're not going to give you a lot of space for indicators. So if you do want to be adding more moving averages and more indicators, you are going to have to upgrade your trading view, and remember to use the link below in the description. So once we have set 50, then you're going to set the 200 as well, and the 200, you'll tap 200 under the length, and you will then set the color. We usually use a light blue as a standard one for that. Now before I jump and I add too many of them, we're going to start off with the first one, which is the moving average, which is the 20 moving average. Now remember what I said, where you know the price can look quite volatile, right? It looks quite confusing, and then you look at this one simple line, you're like, oh okay, wow, price has done so much in their time, but this was the gradual flow of the trend through all of that. And you see how it just calms you down a bit and it gives you a little bit of an easier flow of what it actually is. Now when you see how this actually works, is when we are trading up, guys, and this is when these things get really powerful. We love using these as supports. And as you can see, this previous run from Bitcoin from the early September of 2020, you can see how we really started to rampage. And the whole purpose of this is when we are trending up, we want to be trending on top of this line, and we want this line to be support. So any tests that anytime we come and test this line is a great sign for us. And it just shows that we are moving in this momentum. This is the momentum we want to keep. And you see how when we're trending upwards, we want this line to be at the bottom. We don't mind if it comes and tests at any point, but we want it to hold it as support, hold it as support. And as you can see, as soon as we drop it, and we start closing under those sort of levels, do you see how we then start getting a shift in trend, and we start getting a little bit of a change? And that's the basic concept of it, is if we're moving in this direction, we want to continuously hold this trend, and we want to hold it as support, hold it as support, hold it as support. As soon as we now drop that trend, and now we start closing above, do you see how we start getting a turn in the full trend? And that would have, your indication would have been, we are closing below, we are no longer holding this as support anymore, and now we're starting to lose some steam. And then you can see how we start to trail down. Now this is where it gets interesting again, because when we start trailing down, do you see how the line now stays on top? So now the line becomes resistance. So what it means is we officially were in a nice upwards trend. We then started to change the trend, and that was the closing under indication. We then, do you see how the line remains on top? And now we make our way down, and now this becomes resistance. So this is confirmed, okay, we're in a short-term downtrend, we're moving in a downtrend, and as long as this is staying resistance, we will continue the downtrend. Until what happens again is we break above and we start holding it again. And you see the simplifying of understanding that when we are trending up, we need to be more holding the MAs as support, and when we are trending down, it must be used as resistance. And anytime we change that, it's now giving you a little hint on something has changed. Now, if we jump on and I add a second moving average, because these are very powerful when you start using them together, because you know, 20 moving average is used for a lot more shorter term sort of view. So it gives you a nice little indication, but it doesn't give you the full picture from behind. And sometimes it can maybe get you in and out quite too early, or get you out too late, or get you in too early. Now what we do is we like to add the 50 moving average as well. We're just looking at a little bit of a bigger picture and a bigger average of price over a certain amount of time. Now we like to, do you see how these lines like to cross? Now this is the second part that's used by a lot of traders and a lot of people's strategies out there, is when we get the cross is usually giving you an indication we are starting to lose trend, or we're starting to change momentum that we've currently been running in. Now do you see the same thing with the 50 moving average? How when we were trending up, we were holding it, we were holding it, we were holding it, until all of a sudden we broke down. We then tested as resistance, and then we started to move down. But you see how we got this little cross. Now this little cross is also great. It's quite simple to understand that when these lines are crossing to the downward side, it's giving an indication we are losing steam, and then usually we start to have a sort of drop off. Then 20, and then all of a sudden these MAs now become resistance. We're trailing down to downward side, and as soon as we break through the top of them and we start breaking through, you see how later on comes across again. Now the way I explained it with support and resistance, that already gives you your hint. When we're below the line, we're going to start changing trend. Or you know, if we've been trailing up, we want that to be below, we want to be holding as support. As soon as we break below and we start moving down, it's already giving you indication we're starting to lose some sort of steam, and then you'll get the cross over here which will confirm it for you. So we like to use the crossing of these lines as the confirmation. We already knew that we were losing steam because we're no longer holding support anymore or resistance anymore, but as soon as we get the cross in these MAs, usually it gives you a confirmation. Okay, what you thought was right, we have now confirmed, we started to change trend. and that's how we can basically start to move. Now, when I'm using the 20 and the 50, this gives me a little bit more of a shorter term view. So I like to use this more on shorter time frames. If I'm doing, you know, one trade a month or one trade every two weeks or so, I like to use them because it's a little bit of closer up and it's looking at more shorter time frame sort of data. Okay, so these are usually used for short time frame. Then you get the very important one where the 20 is no longer important. You've got the 200 and the 50. Now the 200 looks at a long time ago data. It looks at the last 200 days, the average of that price. So it gives you a very long-term sort of view. So the 200 is always a really good long-term strategy indicator. It's one to know, I want to hold on for the year, or I want, you know, I'm a long-term investor and I just want to track the really long-term trends. The 200 day gives you that really good sort of indication, and it's very similar, guys. Do you see over here that as soon as we broke, so anytime we break and we don't hold support, you know, it's invalidated. We can turn at any single point. But if we break and we hold this line, look what happens. Look how we just get this massive growth to the upward side. And as soon as we change something and we start to drop, you see how the pattern has changed and the momentum has actually changed. Now we love to use the 50 and the 200 day moving average because these are big indications that a lot of traders out there know. Now we've heard of something called a golden cross and something called a cross of death. Now these are usually very hard time frame indications for you, and they usually indicate we're either going to go into a really strong bull market or a bull cycle, or we're going to go into a really strong bear cycle, or, you know, a bit of downtime for the actual market. And that's the simplicity of the cross between the 50 and the 200 to the upward side. So when we see we have a cross of the 50 crossing upwards over the 200, this is known as a golden cross. And as you can see, the last time when we had this golden cross move, look how long we went on a really strong rally to the upward side. And then you get something called a cross of death. And now that's indicating, okay, we've lost steam, we've lost the momentum that we were moving in. And then all of a sudden we start changing into a different pattern. And now recently you could see we did manage to recover. And how does it recover? Because it just means the price comes and gets back above that moving average. And as soon as we start getting back above that moving average, you can see how later on we then come and get the cross. And right now we have Bitcoin sitting right on the 200 day moving average. Do you see how well these indicators are actually respected to these specific levels, and where they bounce or they actually get rejected? So now what we want to see is if we can have this price over here hold this 200 day moving average where we're sitting right now, you know, we should not get the cross. We won't get the cross between these two lines, which can still indicate that we are still in a bullish cycle or in a bullish trend. But now, if at any point, if we do get where the price starts to drop and it starts to make its way down, we will soon see this moving average come down, and eventually we could possibly get a cross of death. And you see, then it just gives you an indication. Now, guys, why is this so important? Because what it's going to do is it's still going to teach you the basics of when in a market, when it's time to be buying in a market, when it's not. Is it a buying market? Are we trending up? And when we're trending up, you should be looking at support buys. And you know, the reason why I'm saying that is because if we've recently had a cross of death to the downward side, are you going to be looking at buying right now? No, you're not. You're going to be waiting to see we break above again, wait for confirmation buy, and then you want to be actually adding in. So it just teaches you in the cycle, are you buying in a bear cycle right now, or are you buying in a bullish cycle when things are starting to turn? And your little indications are when we start to break above these zones, simple support and resistance. And as long as we hold these levels, keep holding, keep holding, keep holding. Wait, now all of a sudden we've dropped a level. Now all of a sudden we're not holding it. Okay, maybe possibly I should take a little bit of profits there, maybe something. You see how it just starts to give you an actual little bit of structure. So guys, remember what I was saying, 20 and 50 is what I like to use for shorter time frames. 50 and 200 I like to use for larger time frames. You do have a golden cross and you have a cross of death as well. You will be seeing this lots in the future, and just remember, support, resistance. If I'm above it, I want to hold it. If I break it down and we have it as resistance, don't buy, don't buy, don't buy. Wait for a break, wait for us to change momentum, and then look to start adding to your portfolio. And again, guys, I just want to give another shout out to our sponsors, which are BYBIT, and I want to remind you that under the exchange, they also give you a basic chart section over here. And if you go to the advanced section, you are then able to add indicators, and you are able to add these moving averages as well. So if you are busy in and out of the market, at least you are able to set this up for yourself as well, so you can practice and you can see how it actually works itself. So Banter fam, let's have a quick recap of the show. Now remember, what are moving averages? Guys, they get rid of the noise. They make it to actually see, I need to see a basic trend. Are we moving up or are we moving down? And this gives you a beautiful average of the price and gives you a simple line to indicate, are we in an uptrend or are we in a downtrend? Now remember why we use this, because it's gonna teach you on how to buy confirmation buys, and it's also gonna help you understand what trend are we in. Are we in an upward trend? Are we in a buying trend? And when you're in that trend and you have entered the market, you want to be holding that trend. You don't want to be losing steam. Remember, you want to hold that support, and when we are falling under, it is going to be resistance. You want to wait for the break of that, and then you want to act upon that. So it just gives you a little bit of structure for yourself. And remember, how do we use it? You're always going to refer back to this video, and remember, these videos are here to teach you, for you to always fall back on. And remember, practice makes perfect. Don't put all your money on the line. Learn how it works first, build a strategy around it, and then act on your portfolio. I will see you all on the next show.